Okay, hello, good morning, everyone. Here's the macro snapshot for Monday, June the 10th, 2024, recording this about 6:50 in the morning. Obviously, guys, the big news overnight was the strong performance, especially in Italy, but let's say France and Germany, uh, of the sort of more right-wing parties, the nationalist parties, but also a little bit some of the extreme left parties. So what we sort of got overnight in the European elections, parliamentary elections, was that the two sort of more, I don't want to say extremist, but let's say non-centrist parties did better than expected, especially in France, with the result, as I was saying last night in the video, that President Macron of France has called a snap election for the end of this month for the National Assembly there. So basically, that's just creating a bit of a risk-on tone, especially over in Europe, a sort of a sense of uncertainty. And I think the sort of the problems there, or the nervousness, is around historically some of these parties on the right-hand wing a little bit skeptical about Brussels, so they're Euro skeptics, which could put pressure on the euro, on the currencies, the idea of being independent from Brussels fiscally, and also on the spread. So let's just look at the reaction. What you guys can see here on a daily chart here on the dollar index, which is about 58% euro, you can see a pretty strong breakout. So we had that on the back of the non-farm payrolls, the strong non-farm payrolls number on Friday, this first green candle, and you can see here breaking above the trend on euro weakness and a bit of a flight to sort of quality or flight to safety last night. And you see, so the Dixie breaking up, and then that's reflected in the euro itself. So this is on the futures, again, following on from the weak price action on the non-farm payrolls on Friday. You can see the euro breaking down here. What's going to be interesting, we're starting to look here, it's below. If you look at all the moving averages, you see here the 100 and the 200. So it's broken down below the 100 and the 200-day moving averages here. We are coming into a bit of support. I would say this level here, anything the band from 107.13 to about 107.20, 25. So this band of support here, we could get a bit of consolidation down there. And possibly we'll get down there, hold for today and tomorrow. And then, of course, we have CPI and the Fed on Wednesday, which could determine whether this thing bounces or goes straight through. So quite a lot of action there. Also, just on the currencies, we didn't really, it's interesting to see, not really a safe haven as such. It's really about US dollar strength and euro weakness, because as you guys can see here in the yen didn't particularly bounce against the US dollar. Where we did see, what's quite interesting to me is that despite the sort of general sort of risk off tone, we saw that the Aussie actually sort of held in there overnight, not too bad. New Zealand, not too bad. And if we look at the Canadian dollar, actually being sold off a little bit. So the Antipodean currency is doing quite well, all things considered. But where we did see some, pretty serious weakness was the sort of within the Europe safe haven, so to speak. So we saw Euro, Swiss franc really under a lot of pressure here. So as you guys can see here, going back on Friday, that essentially did nothing on the back of the non-farm payrolls, but we had a big red candle down overnight. No surprise then. If we look again, let's say at the moving averages, you can see we've breached now the 100 and then the 200-day moving average. So this is the fatter one here. So we're down below the 200-day moving average. What is interesting there, just in terms of euro, Swiss franc, is that we're if you go all the way back here to the beginning of February, you can see here we're at the 50% fib retracement here. So pretty key zone here. Let's see if it holds today. Again, it's sold off quite a lot. We can see that the euro against the Swiss franc in the last, 8, 9, 10 trading days has sold off over 300 pips, about 3%. So maybe that's enough for the moment. Maybe that's going to stabilize. Not saying it's a buy here, but certainly I think if it gets down to this level, which is the 61.8, which is about 0.955, let's call it, around about here, the 61.8. I think that could be an interesting sort of entry level. We'll keep an eye on that. So that's what's been happening with the currencies. But the other fallout, of course, has been in some of the yields. So what we can see here, I just want to show you on the yields. So let's look at the 10-year yield on the German. You can see here again, just gathering momentum after the non-farm payrolls, the hot payrolls number last Friday. So you can see here on Friday that the Bund yield went up, and again overnight we've seen that's gone up a bit, but not as much as the French. So you can see here there's the gap upwards on the French yield, and I've been saying that that 3.24, 3.25 level is quite an interesting level actually to go long the 018. Now that we have this election result and we have the national elections called by Macron, that could complicate that. But I think that's a natural target there for the 10-year yield on the 080s to go up. And also what we saw here is that a bit of risk premium has come into the European bond space. So we see here, if we look at, let's say, I think we've got some spreads here. So let's look at the spread here. You look here, this is the spread between the 080s, the French bonds over the German, which is considered slightly safer. Although, again, in Germany, the Scholz's ruling party did very, very badly, is now the third party there. You see here, though, overnight that gapped up. So the peripheral spreads, or not, historically we call France peripheral, but let's just say the spreads of the French bonds over the German counterparts going up, I mean, essentially about 5 basis points. And then if we look at the spread of the BTP, so the Italian ones, let's have a look there if I've got it here. That also going up a little bit. So starting to break out here of a sort of some kind of flagging formation here. We see the peripheral spreads here going up. So I think that the basic takeaways that's got the market's attention is that European politics is starting to fragment a little bit. It looks as though parties are moving away from the center towards the left. In terms of, like sort of the Greens and the Socialists. And then, of course, on the right-hand side, we've got the more nationalist parties. So markets generally don't like it. They prefer centrist parties. They prefer parties which are pro-Europe, pro-Brussels, not Eurosceptical. So that could be a theme over the next few days. And now, as I say, we have the elections in France leading all the way into the summer. I think that there's 2 rounds. I'd have to check, but I think it's the end of June. And then I think July the 12th are the 2 rounds for those national elections in France. And of course, that's just before the Olympics. So that's going to be interesting. It's just going to keep the market a little bit on edge. So I think that could see that, the Euro Swiss under a little bit of pressure, and it could see a little bit of upward pressure in the peripheral bond spreads. But of course, a lot's going to be determined as well tomorrow, on Wednesday by the Fed and the US CPI. Just in other markets, just in terms of Europe, what we also saw is that on the Euro stocks, or the Euro Stoxx 50, that gap down here, and you can see that that's a pretty nasty red candle. Let's have a quick bit of tea. A little bit of Lady Grey this morning. So you can see here that the Euro Stoxx gap down. No surprise there. What's going to be interesting, though, is just on the fib here. It was rejected at the 50% fib. If I throw that onto a 4-hour chart, just to get a little bit more granular detail there. So it did gap down at the open at 2 a.m. Big red candle, but sort of as we speak, as I say, just coming up towards 7 o'clock Eastern here, just holding on the on this 50% fib, which is from this last sort of up impulse on from May of this year. So let's see what happens there. Like if the US equities come under pressure, but not really a lot of pressure here. You see on the ES down 13 basis points, the Nasdaq overnight down 11 basis points. So, trading a little heavy, probably in sympathy with the European markets, but not nearly the same as the Euro Stoxx down 123 basis points, and the German index, the DAX, down as well. What I would draw your attention to, though, is continuing underperformance of the Russell. And I'll just put this back on the daily chart. If you look at the Russell is down about 65 basis points compared to the S&P 500 and the tech stocks, the Nasdaq. So we're now getting to the point here that on this most recent impulse, the Russell, at least on the futures, has broken down below the 61.8 fib, starting to break down here, or at least test some horizontal supports. And if we draw the slightly longer fib here, we're now just down below the 50. So I would say a very key level on the Russell is going to be on the futures, which also actually coincides with 2000, which is a nice coincidence. You see this 2000 level, psychological clean round number, coincides here with the Russell on the 61.8. So that's going to be an absolutely crucial pivot point to be watching today. And of course, midweek when we get a lot more sort of price action. Other stuff to be looking at, just also in terms of the Eurozone, which will not have helped those bond yields, is that we got quite a few speakers from the ECB. We had, Holtzman, who was a hawk. We had Kazaks and Nagel. all saying that basically, essentially, let's just simplify it, pretty hawkish, especially Nagel saying that, there's no particularly set paths to cut more. We may have to wait all the way through the summer. They're going to be data dependent. So pretty much in concert, a unified message coming from the members of the governing council. And we had Lagarde herself, I think, speaking on Friday after the Thursday decision. So very much the ECB wants to give this sort of message that they're not on some predetermined cutting cycle. They're not going to be cutting aggressively. They're data dependent. They need more information. They're still worried that inflation could sort of go up a little bit. So all that to say, that is not great for the yields as well, in the sense of the yields going up in the European space. So yeah, so that was the messaging over the weekend. Apart from that, not a huge amount of other stuff I want to talk about, guys. What I will say, oil. Just interesting. At an interesting point, we saw that over the weekend, some of the official selling prices, the OSPs from the Saudis, especially out to the Asian market, was a little bit weak. So that's indicating a little lack of demand there, or softness in the demand. And just from a technical point of view here, we had this big sell-off, in after the OPEC meeting. As I said, that was a little bit overextended. That was the end of a Fibonacci meeting. The RSIs were very overbought. But if we actually look now and look at something like the RSIs, they have come off that overbought level. They're now in much more neutral territory. So the point is here that they could go to the downside or to the upside. Now, if we look at some of the moving averages as well, well below the moving averages. So that's still a little bit negative. And what I would say here is that the market came down, was overbought. And what I was saying is that it would have a reactive bounce back up to this larger fib on the blue here, which is around about the 75.40 level. But on the shorter term fib, which is just this impulse down here from the 29th of May, that's the 38% fib here. So at this point, the bulls have failed. The bulls got the reactive bounce, but at that first barrier, or that first obstacle, which is just a 38% fib here, around about the 75.50 mark, and as you guys can see here on the daily, they've kind of failed. So if we just throw this onto a 4-hour chart here, we'll have to see what happens here, because you could argue this is turning into a bit of sideways consolidation. I don't know, is this some kind of flagging, consolidating formation? Maybe. But at this point here, the bulls need to really take it above this this intersection, this crossover zone of the two fib levels, and then they need to push it at least at a minimum, I would say, to 76.60. Then the next obstacle, 77.57, these fib zones, and then they have to push it out through the shorter fib all the way up to this one here at 80. So a lot of work for the bulls to still to do. And in terms of the bears, they're mounting a defense here, or a bit of a counterattack. And if the bulls cannot get this above, let's say, this recent little high of 76.25 in a hurry, then you'd have to say that there's a possibility here for the bears to reassert control, and we might even that open up for the next sort of short-term Fibonacci extension measured move, which could measure all the way down to anything from 71, 70, 68, 69, could open up another basically $5 or $6 on the downside. So we're not there yet. Possibly, we'll get an answer today, but just say that oil is still under a little bit of pressure. The other thing which I want to talk about, guys, just quickly is gold. So we saw increasing strength in the US dollar yesterday in the video last night. I talked about the fact that the real yields are relatively high, and they're starting to reassert their traditional sort of relationship and correlation with gold. Interesting levels here for gold. Again, if we look at like a Fibonacci extension here, was this overextended? You can see here that gold, just from this impulse here, sort of finished one of its measured moves. So that's not a surprise. We're having a bit of a bounce here. On the shorter term fib, which basically measures back to the middle of March, you see here from this impulse from the middle of March, back down here, exactly at the 50% fib. So from a technical perspective, is this a reasonable risk reward for gold? Yes, it's not bad. But having said that, with the news which we had on, I think it was Friday morning, that the People's Bank of China, at least officially, did not add to their purchases in the last reporting month, which was May. The market's trading a little bit heavy, still reeling under pressure from that news from the Bank of China, the lack of purchases, and secondly from the stronger than expected non-farm payroll. So just to get through this nasty red candle, pretty big breakdown here is going to take some energy. And to be honest, if we get a relatively hot CPI and a relatively hawkish Fed, I think really that gold could really break down through some of these levels here and maybe go all the way down, as I said in the video last night, to maybe this level here on the futures, 21.75, around here or so. We shall see. Silver, having a bit of a better bounce here, and copper also bouncing from quite a nice fib level here on the longer term one. This sort of purple one going all the way back here. That was the 50% retracement, which coincided with the shorter term fib, the 61.8. So basically this level here on copper, reasonable risk reward here around about 4.44. Getting a nice bounce so far this morning or overnight session. Let's put that, let's say, on a 30-minute chart to drill down there. So as you can see here, pretty technical bounce there. Again, what I would say is, as always, you'd have to say, well, okay, great. Now the bulls have to take it above this first sort of retracement level here, which is about 4.53 on the US futures here. So that's something interesting to see if that's just a reactive technical bounce or whether the bulls in copper can take that higher. Now, in order to take that higher, they're probably going to have to see some good news out of China and a bit of positivity in global markets, which we don't have a lot of data today. That's the final thing which I will just look at, guys. Look, I think there's in the US, we do have the bond auctions for the 3-year. I think that's going to go okay. The only thing really of note, at 11 o'clock, we have the 1-year inflation expectations from the Fed, which is kind of important or interesting, but not nearly as important, of course, as the CPI. So we'll keep an eye on that. Okay, guys, I'm going to leave it there. Keep an eye on all of the European space in the trading session today, and we'll keep on talking. Have a great day. Thank you.